Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for December the 13th, 2011. Now, to get started for our first trade for tomorrow, we're again keeping into the same concept as the Forex weekly outlook. As I had suggested, the equities took a big hit today. That is likely to continue. Now, we do have the Fed this week. We have the Fed probably trying to manipulate the markets further, along with other central bankers and politicians. So it is a higher risk trade. We could get a push higher up in the equities, but we're going to use that to sell. Now, again, I've talked extensively about this in the Forex weekly outlook. We are grossly overbought in the S&P 500. And of course, what I had also suggested is that we had these 70 unaccounted for points that are basically put there by the Fed by dumping liquidity into the system. So again, if we take that out of the system, we would have an S&P 500 sitting probably at below fair value, which would be down under the 1200 mark. So again, with this 70 unaccounted for points, that really doesn't bode well for the S&P 500, and it is my opinion that the Fed artificially dumped that into the system to prop the equities up for the inevitable fall. So when we look at the close today, 1335, our key levels 1243, 1241, and 1232. We've closed below the 3 and the 8-day predicted moving average, but our key support line at 1232 is currently holding. Now, in the case of a particular long trade, we may suggest doing that off of this key support line. However, because of this extreme overbought condition and as I've talked about with this 70 unaccounted for points, this looks like a very, very good selling opportunity. Now, our predicted MACD, predicted TSI, they're still holding and they haven't put out a sell signal yet. However, when we look at the short-term crossover from Vantage Point, we can see that the short-term crossover went off actually 3 or 4 days ago. Our medium-term crossover is now beginning to cross to the downside also. Our long-term, not yet. We're in the early stages of a likely trend reversal here. So from there, what we're going to do is we're going to go into that daily report from Vantage Point and see if we can fine-tune these entry points. Tomorrow, we have the Neural Index down. That's positive for our short. Predicted high for tomorrow, 1247. Predicted low, 1223. We anticipate the market will not just go straight up or straight down. It's going to play its range. It's going to retrace. The retracement area we're looking to get back into shorts is in this 1247 area. In my opinion, stops should be over and above this range top at 1270 just to be safe, and to be even further safe, I would be putting them over 1300 and scaling positions in slowly. Depending on what the Fed is going to say on Wednesday, that's going to cause some volatility. And again, it is a very, very choppy trade, but there is a pattern here. And it's a pattern that we can see that is very similar to the exact same time last month after that European summit. So we also want to work in the basic fundamental into very, very strong technicals. And with that has a short. When we look at the Vantage Point predicted high and predicted low, you can see that it's trying to stay within that range from Vantage Point. But again, when we look at these candles up in this 1260, 1265 area, repeated selling. And again, I've been telling my own clients to sell this repeatedly on any kind of strength over the last probably 4 or 5 months. And the only thing that's causing us some issue is, again, the European summit and everything that's going on. So again, with this overbought condition, the short-term cross, the basic fundamental has a short. Now that's our first position for tonight. Now, with some of the big moves in the currency markets today, we're going to go back to the US-Japan currency pair. We've been trading this one long basically for months. Now, again, we've got this intervention candle that, again, was not semi-successful is the best I could say, but we're holding now above this Vantage Point key level at this 77.57. We've dipped slightly below it on the one candle last week during, again, that artificial spike with the equity, with the Fed and everything else. We're managing to stay above this. We do not have this triple EMA crosses complete. We do not have the 3-day crossing over the 8-day or the 18-day predicted moving average, which still has us bullish. Predicted MACD and predicted TSI still showing a loose buy signal. the predicted short, medium, and long-term differences all hovering just above the zero line, which is again trend ready. So if we're looking at a very strong bout of dollar strength, when we look for value to buy US dollars, the dollar yen comes to mind. Now, if we go into our risk currencies like the CAD, the Aussie, the New Zealand, the Euro, the Pound, these can really cause us some headaches, where our risk to reward is much better on the dollar yen pair. When we break down our individual crossovers, we can see our short term has just crossed back up to the upside, our medium term crossover flat, but our long term crossover remains long, as does the triple EMA. Now, from here, what we want to do is have a look at this daily report. When we look at the daily report here from Vantage Point, we have 77.75, 78.26. That's our current range. Our neural index has turned up yet again. We've had a retracement last week when the dollar sold off. It pulled back to the 77.20 level, but it's still held in there quite well. With risk on, risk off, the yen is not as effective. The dollar should still prevail in this particular trade, regardless of the equity markets, and that's a key thing that I'm going to say here, and that's what points me towards the dollar yen value and the possibility that if the dollar sells off, the yen will also. So if in that particular case, this is a safer bet. Now, when we look at the daily ranges from looking at the Vantage Point software, we can see that the dollar yen predominantly stays within the Vantage Point predicted high and predicted low. We're continually tagging this upper band of the Vantage Point predicted low, and we're not hitting the bottom. We've touched the bottom 2 days ago. Today we didn't come anywhere near the predicted low, but we've slightly pushed above the Vantage Point predicted high. Now, of course, we would never buy up here in this predicted high range. We wait for a pullback and we get long. So for tomorrow, we're going to be looking at that again, the 77.75 to 77.50 range to get into our long trade, and our stops should be down in the 76.50 area just to stay out of this intraday stuff that's really causing a lot of traders issues. So with that said, these are the market positions for December the 13th, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.